Hello everyone, and why not? Let's get started on time right now. So today let's take a look at the chapter 4.2, just wrapping up with the free indicators, advanced free indicators from chart prime, and also my final configuration. I want to talk about layering, right? So layering, just in case you don't know, it is just changing or adding your indicators as many as you need, and then changing the configuration and from one to each other. That way you can turn on a layer or turn off a layer. We'll see that in a minute. But in the meantime, let's get started with you guys because you guys are awesome. We got Army Piper in the chat. Get learned, he said. The first one in the chat. Harp, Key Digital, Digity. What's up, my friend? Jesse, Trading Intuition. What's up, brother? Welcome, welcome. Alexander G, Queen Mode. Welcome. Great to have you here. Really, really enjoy you guys being here. Jesse in the house. Welcome, Jesse. And of course, again, Trade Intuition. Joel Vázquez. ¿Qué onda, Joel Vázquez? Espero que estés súper bien. Ojalá ya hables español. Hey, what's up, Joel Vázquez? Hopefully you're doing great and you speak Spanish. In that case, welcome. Los and Crypto, what is up? Where's OC? Damn it, I'm here, my friend. Why? Am I muted now? Am I missing a camera? What's up? Let me know. So let's see. Who else we got in here? Harp, what is up, Harp? Welcome. So let's get started, guys, with where we left out. All right, so many things have happened. Let's take a look at the chart now. James Amonity, what is up? Welcome. So let's get started here on the charts. This is where we started, or where we left it out, right? As an entry on the retest, taking profits at this area right here. What happened? Perfect entry right here. It's drifted a little bit below, double bottom both on our dynamic reactor or SMA combo, right? Went up. What we should have done is move our stop to entry, TP number 1, because we are on previous resistance, right? Going back down, it did not take us out. Perfect. And then TP number 2, or TP number, or complete TP, right? At this point, we just have trailing. What happened? Goes up and then goes all the way up. This is our trailing normally, something like around here. So we should be getting out at these areas right there for the final movement. Let me just Control C all of these drawings in here. And let's do one more analysis at the end of it all to see, keep a track on what's happening. At this point, what's going on? We're trading to break through. Why is that? This is something that I really measure. Let's go and visit Chunky Candles. Chunky Candles, let's welcome him in here. So what's up, Chunky? What we got in here, it is a big body candle, right? Usually we're gonna be seeing a couple of those small candles, all right? When we see those small candles, well, everything is nice, we keep moving. But when we start seeing big body candles, something is happening, usually volume influx, right? As you can see here, some volume influx, and then what happens? Sweep of the lows, all right? The placement of this candle, it's very important, especially when we are breaking through an area of resistance. Let's take a look at previous breakouts. For example, this one. Do you see this? I mean, of course, those are not small candles, right? But remember, it's both the size and the placement. Look at the placement on this big body candle based on the previous candle size, all right? So we're having a big body candle going through, confirming a breakout. It's not about the breakout, it's about retest your entry, and off we go for a perfect entry on the 15 minutes, all right? So based on the previous candle size, and let me clear this up. Based on the previous candle size, right? This is what we learned in chapter 0, basically session number 2, if I'm not mistaken, candlesticks, right? On candlesticks, we talked about an engulfing candle, and also that the placement at this point, it is going through the dynamic reactor and our SMA combo. Is it confirmed? Not just yet. It closed right at that point, basically not confirming a full breakout, but we have a second chance. So are we long in here? Of course not, because most likely this could be a top. All right, why? because we don't long tops, we don't long resistances, right? What we need then to enter, well, first let's just do a review, right? Let's bring up our oscillator here. Let me now configure my oscillator so you guys have my settings. First of all, I like my zero line in here. All right, let me click right here, the gear icon, right? And then I'm gonna be going over style, going all the way down. The zero line, I want it to be very bright, I want it to be a little bit thicker, and I want it to be a complete line, right? Not dashed. That's gonna be for my zero line. Then there is a threshold for oversold and overbought. Because this is the way that used to be in the past, I just like the way that it was. So I'm gonna be changing this, the bullish line, to green. All right, I'm gonna leave it as is, the line configuration, and I'm gonna do -95. Click away, and look at that, we have a new dashed line. That is my threshold area for reversals. All right, now let's go and take a look at the bearish control line. I'm gonna set it on red. Again, the configuration line is as is, and then positive 95. All right, click OK, and now we have a red line up here. All right, so that is my threshold area for reversals. So look at that, we had a goose head. Usually goose head, little retracement for a further move to the upside before a bigger retracement. At this point, we're going for a double top, right? Something like this. Let's see what happened right there on this double top. You see? First top, secondary top, and then retracement. Since we didn't have any resistances in here after the first top, and then we had a engulfing candle going through the resistance that we had, basically we had a free way to go through. All right, so no obstacles in this zone. But right now we have one of the biggest obstacles, which is dynamic reactor, and guess what, our combo. What's happening right now, we're having a retracement on that candle, right, as we could be expecting. So what's going to be our entry? Well, you can go ahead and short this candle if you want to. I mean, we're at the very top in here. Your stop loss will be short, so you could be shorting it right now. But I would actually just wait and hold on a second to bring up at least 3 different indicators, right, to give me the go. So this is what I call a 3-layer indicator, 3-layer entry, right? 3-layer system. We're going to be talking about a 3-layer system further into an advanced chapter. Maybe we'll be somewhere around chapter 6 or 7. I don't know yet, but we'll give you the title on the 3-layer strategy, all right? But let's just go first with that 3 different indicators giving me the rejection or the continuation. Just so you know what we're looking for a long entry, we want a breakout, big body candle, right? Maybe 1-2 candles, retest, holding above the zero line, because remember, as we hold the zero line, as we are above the zero line, our price action, it's bullish. As we lose the zero line, and most of the action, all right, excepting these 2 peaks, but most of the action, it is below, right, till here. The price action, since it's below, it's also bearish. You see that? So right now we're breaking back above. We want to hold the positive momentum in here, right? We want to find some support, previous resistance becoming new support, breakout, retest. Remember, it's not about the breakout, it's about the retest. So let me just clear this up once again. There we go. And that's exactly what we're going to be looking for a long entry, all right? Breakout, retest. Once again, breakout, retest, holding the zero line, and then off we go to Valhalla. Or we'll see how far can we go, right? In the meantime, let's just treat it as we treat everything, right? With trend lines. So the first trend line that I can start drawing, is going to be somewhere around this line in here, right? So you'll see that it doesn't really match. In fact, the best match will be an arch or half of a parabola. All right, let me see if I can measure it. Well, let's not take that long, but let's see. Here it is. Maybe, oh, no, the ellipse, the arc. Where is the liquidity residing into this area? Well, where we have a bunch of candles, right? So the next possible bullish scenario would be somewhere where we have liquidity, but we're gonna be ignoring that for a second, and we're gonna be trading with trend line. So we're gonna be doing the next trend line that does matches the actual movement, and what we want to see, it's breakout, right? It's not about your breakout, it's about your retest, and off we go now to where? To our next trend line. Look at that, usually that trend line, also it's coinciding with the liquidity on the parabola. You see that? So this is a little bit more advanced. You don't need to know this. This is just basically by reading more literature. But I just want you guys to know or see what I'm seeing when I do my analysis, all right? Don't worry. The way to make this simple is just two ways, right? First way that we learned here, it was trend line, all right? First trend line, not matching, that's fine. I can do another trend line, there we go. What am I trying to do? Well, I have a resistance in here, right? Support, which becomes new resistance. I want to see a breakout retest for maybe double top, right? And then aiming for my next support. Remember that we can turn on our support and resistances, or in this case, we can do our market dynamics with our predictive ranges, all right? But let's go and do some old-fashioned support and resistances. By the way, let me just configure one of those with normal support and resistances because I think they're gonna be very useful. So let me go to inputs here. Let me go to my support and resistances. Oh, this is the 12 hours, perfect. Let me see if I'm gonna be leaving it as is. Maybe this one, yeah, perfect, this one. All right, there we go. So this is just support and resistance that we have configured, right? An important part of this support and resistances, it is the proximity section. All right, because it's plotting from where the price action is at. So at this point, I do see a support that I need to break in order to enter for a short, all right? Or a support that I need to hold in order to break out. Look at that, now I have a target, right, to bounce from, bouncing from, going for retest, and then off I go, all right? Now, what's the next point? Well, I do see another support in here. So if I take this short in here, my first target is going to be here. All right. Well, in fact, my first target is going to be right where I have a bunch of candles, right? TP number 1, early TP, right? The usual TP, that's going to be TP number 2, main target. And then we trail it until whatever it gives us, right? Just basically as we move forward or downwards, we're going to be adjusting our taking profits. All right. So let me clear this up. Now let's talk liquidity. All right. Remember that I don't remember if I taught you this on this class. Let's do just a crosshair here, right? X and Y in a parabola equation. Let's just not jump into the parabola equation, but very quickly, the parabola equation, it is not a straight line, right? That means a straight line on a 45-degree angle means that I have X and Y growing at a constant. If I don't have a constant growth and I have, for example, I grow 1, 2, 3, 4, but then I grow 1, 2, you see like the change? Well, then I could be having a parabolic movement, right? When do I start looking for where the parabolic movement is at? Well, usually when I'm turning from the 45-degree angle to higher than a 45-degree angle, usually we have a curvature, right? Depending on how I draw it. Then that curvature will give you where we have the where is the volume located, right? So if you took your measure tool, let me see if I can just bring it up. Come on, it can be truth. That I keep losing it. All right. The arc. It's not the arc. It's the arc tool. Here it is. Perfect. So I can just basically from the bottom sweep the lows to the high to my meaningful area, or whatever it cuts most of those lows, right? And that will give me usually my area of volume. All right. So there's another way to do this. Remember, we actually have a tool. Remember the last class that I told you guys that we're going to be using indicators, not to do this manually? Well, I think we can start doing this. And one of those is a radius trend. Let's take a look at this one. There we go. Remember this radius trend? Well, then it creates kind of like a weirdo parabolas, right? And when we want to jump in, and I taught you this the last class, guys, remember? When we're jumping into inside that dotted line and looking for support, that is the way, or that is the zone that we're looking for long, right? The same for shorting, right? So another one, which is actually one of my favorites, is a Gauss trend crossing. Let's go and take a look at it. Now remember that this is an automated, based on the mathematical output, parabola drawing. So if I clear my hand drawing, look at that. I mean, I want you guys to see and notice how precise, and I've even just draw this light. I mean, at the very end here, my drawing is almost perfect, almost in line of what I'm seeing, right? Just remember that this is faint green, which is not calculated. The calculation is not over, all right? And also look at it based on this parabolic movement, right? Look at that we have a tangent. What is a tangent? A line, a straight line that grasps the side of the parabola, all right? That usually where we grasp, that is showing me where the liquidity resides, right? Not only that, it also tells me when it's too late to keep longing, because if I break this trend line, it's gone. Breaking the trend line. It's not about the breakout, it's about your retest, and then you short it to the liquidity zone. You see how powerful these indicators start getting now? So first we learn the theory, right? Now that we understand the theory, well, there's no point to actually be just doing it manually over and over and over and over, right? Let me just clear this up. Let's go back and remember the theory, right? Just let's do this exercise one more time, and then we'll go over to the next indicators, right? So the first part, it is the trend lines, right? Basic trend lines, right? We already know this. We've been trading since chapter number 1 with trend lines, right? There's nothing unusual about this, right? The next section of trend lines, when we caught a parabolic movement, right? When it's not a straight trend line, when we need to use more than one trend line, right? We know we're having not a constant. When we don't have a constant, we need to use a parabolic measurement, right? So I remember it was x squared. I don't quite remember, right? Depending on how you want to calculate that parabola, whatever. The point is that if we calculate that parabolic movement, and once again, I lost that freaking tool. Come on, I need to, let's just do it too. There we go. I'm gonna be grabbing the bottom here, right? And then aiming at the top, and then looking for any point, right? Could be this one, could be this one, could be this one, that matches the parabolic movement, right? Usually, you see this blue dot that is formed, right? That I pull out, right? Usually, that's gonna be telling me where is the bottom of that area. That area points at where the liquidity of the parabolic movement of the parabola is at. Why do I want to know where the liquidity is at? Because when I have a parabolic movement, it's a unsustained movement. Why is that? Let's just give you guys a straightforward answer, because we will never reach a zero. or we will reach infinity in a parabolic movement. So when we do this, right, we're gonna be going up, and then we can reach infinity, right? Remember that you have infinity in different numeric values. If you want to count between 1 and 2, well, you can do 1 and 2, right? There's no infinity in there. But all right, count in between 1.1, 1.2, 1.999999999999999. You see, you get the point. We get to infinity, and how could we ever get from 1 to 2? So let's just not go into that. But just you need to understand that there is a point in a parabolic measurement that you're gonna get to infinity. All right. So based on that, it's unsustainable, right? We cannot sustain an infinite movement. So what we're looking for is the breaking point, right? And when we find that break point, well, then we go to find where is the bulk of the equation. Usually in trading, that is where the liquidity is at. Psychological speaking, right? If you don't know anything about a parabola, what do you see here? Support. What do you see here? Resistance, right? When you're breaking down, you're looking for the support or the resistance, right? Easy peasy. So grab whatever you like, right? Either the complex explanation, either the simplest explanation, doesn't matter, right? If you want to go back to your friends and talk about infinity between 1 and 2, be my guest. I love to do that, but I know it gets boring, right? But that's kind of like a passion that I have with math. I don't know why. But the point in here, it is that now that we understand where the parabolic measurement liquidity zone is at, when we break, or if we break, because we could also just rearrange the parabolic movement into, let me show you the breaking point before we move on. Oh, come on, where is it pinned? Here it is. If we create something like a pennant and we do not go to this area, we just sweep up the lows and then continue, because now we have a dynamic reactor down below, right? That's a change of structure. We're breaking the previous parabola and we're making a higher, bigger structure, right? But whatever, that's a little more advanced. We'll see that in the future. But the point in here, it is that when we break the parabola, we're looking for where to re-enter, because we can still make a low, a higher low, right? And then create another bigger trend line. So just so you know, this is how you measure now parabolic systems. All right, now that we know and we understand the theory behind parabolas, because this is part of understanding the indicators that we're going to be using, right? Now you can turn on Gauss trend crossing, right? As you can see, once again, I need to just slightly change ever so slightly my parabola. There we go, right? And you'll see that kind of like matches. Now it's been updated, right? Why? Because it has the new low in here. You see that? So at this point, since this is not a close or a finished measurement, right? This could keep going. Well, then that's why the shade is transparent green, right? And now we understand that we have the parabola. How do we measure this parabola? Well, if we know the theory, we know that this is, by visually seeing, we know that this is where the liquidity is at, right? We also know that we can draw a tangent based on the liquidity. And what would that tangent be? Well, it's gonna first tell me the area where I'm impacting the parabola. It is the area of liquidity, right? And then also, based on the strength on the size of this tangent, which also has to do with another equation that we might not be talking about. It's just too nerdy. But nonetheless, it gives you a metric for a no return point, right? So if we start losing this, well, we're looking for breakout retest. And off we go to where? To where the liquidity resides, right? So where the liquidity is waiting. So for an inexperienced trader, right, somebody that doesn't have the background knowledge and only goes for the indicator, well, sees this indicator and goes, oh, all right, what in the world is this? All right, just looks cool. I have a trend line. Well, now what? I'm gonna be bouncing from it. All right, if I bounce, well, maybe I just go, I don't know, here, there. Man, this is not telling me anything. Let's move on, right? When in truth, you're having a lot of information being plotted in a simple way. What is a simple way? Once again, you have the parabola visually, so you know where the crossover of that tangent is at. So you know when, if we break, where the liquidity is at, right? And what's going to be your target. And also you have a visual breakout no return point. So we're going to be looking for the breakout, entering for the short, taking TP number 1, moving our stop to entry, and then aiming for the bottom of that liquidity. Then we can add this with something like, let me just clear this up, support, classical support and resistance. All right. So where is the crossing? In here, right? Where is the next support? Right there. So I can go maybe up in here. Look at that. I'm breaking. All right. Breaking. So maybe if I do this, well, then this changes. Why? Because I will be making a breakout retest and also respecting this one in here. Let's take a look at a bigger parabola just so we have the concept in here clear, right? Let me just clear this up. Perfect. This parabolic movement, and this is why it's not a closed or finished equation, right? Started this one here, started measuring this one there. What happened? You see that bullish flag. What happened also? We broke the trend line. And then what we're going to do, we're going to be making an impact on, guess where? Very close, if not at the liquidity zone. Well, it also, we used our combo SMA, right? For an early entry, or our parabolic movement, but that parabolic movement was not there. So we use our SMA combo to make a re-entry, right? What happens then? The equation, once we bounce from here, because we're creating a higher low, it indicates that we're still bullish. The machine knows this, right? So it will recalculate for another parabola. Let's see it in action, just so you understand what could be happening, right? Let's replay. Let's go from here. All right. You see now how we have the Gauss trend or the Gauss parabola with the Gauss trend area here. It's not about the breakout, right? It's about your retest, breaking structure, right? Higher low. You see that? All right. Yes, we're in a pickle right now because we are right at the SMA combo. And off we go. All right. Perfect. Let's move candle by candle here. Oh, engulfing candle, confirming breakout. We could be looking now for the next re-entry, right? It's not about the breakout. It's about your retest, possible here, and off we go. Remember, this is old that we have been, this is all data that we've been learning, right? That we've been applying already. So let's go to the next candle. There we go. There we go. Wait. This is a doji candle. Oh, that's our entry. Remember, guys, before you click buy, I always advise to use your oscillator. Where are we right now? 0.9. Should I be waiting for one more candle? Could be. All right, let's just maybe not use that oscillator. Let's use, for example, one of our favorite oscillators. Oh, not that one, because that one is changed for... Oh, yeah. I removed the other one. But that's fine. Let's do this one. All right. Can I still go lower? Yes, I can still go lower. So maybe I could be waiting for one more candle. All right. So this one is telling me waiting. This is one is telling me jump in. This one, let's just use it anyway. It's telling me that I could still go in because I'm still bullish. All right. Although I could be doing something like that. I could also be waiting on this one. Right here, my entry was right there. Early entry. All right, let's go for another one. Remember the non-linear Non-linear, we're still above. So we're still bullish. We're going downwards. Our threshold is the 0 line. Have we break it? No. So we should be waiting 1 or 2 candles to see if we bounce from it or if we push through it. All right. So guys, give me in the comments which one you would like me to focus today on our oscillator, right? And we'll just use it just for this example. I'll be reading you guys. All right. In the meantime, while you guys let me know, because there's a little delay on the live stream, let's use our prime oscillator. All right. Right here, I'm going to be adding something else. I'm going to be adding my clouds or my bands. There we go. Bands on. This is going to be adding what I like to call the squeeze momentum clouds. Remember that in the squeeze momentum oscillator, we want to trade at the top and at the bottom, right? We usually trade these areas, right? And then we start looking for reversals on these darker areas based on the strength indicator, which is the ADX, all right? Having said that, what if I grab my clouds and instead of making them go back and forth on a straight line, I make it go back and forth on the momentum line, maybe on the ADX. That's when I got, look at that. Instead of a straight line, I'm going around or back and forth or something like an ADX, right? Just so you know, it's a little bit more precise, these clouds. But if you already know and like how these clouds move, you will also like how these clouds move and you'll understand it much easier. So let's go for let me know, guys, which oscillator you want me to take or to pick. The prime oscillator. All right, so let's use the prime oscillator. Great. All right, our prime oscillator, we're going right here on the 0 line. We are almost there on the convergence of those two clouds. We need to wait for one more candle. All right, let's wait for that more candle. Let's go one more candle. Red, oh, but that red dot, we're not using it. All right, let me just turn it off. All right, that will be it. All right, one more candle. We're not going through the 0 line. That's cool. All right, let's go. Let's wait for one more candle here. Oh, bounced. We're going through. Let's go for one more candle. Bearish. It's not telling me much. There we go. I have a buy signal, which was late. Why was it late? Because it did not have enough data right here, right? And then I have my confirmation candle. That's my entry. All right. Now this is a pivot. This is a pivot. So I know where to start calculating the beginning of my what? Of my parabolic movement. All right. Let's keep going now. There we go. Confirmation candle. We bounce from it back above the cloud. So here we go. And this is what I wanted to show you guys. Look at the now parabolic movement. Right? You see that parabolic movement? Perfect. Now what do we have? We have a ghost trend line. All right. Let's go and watch the example. Breaking. All right. Breaking still. Right, we're losing the parabolic movement here. Now we're almost breaking that trend line that got recalculated. Perfect. It's not about the breakout. It's about your retest. Beautiful retest. Off we go for the short and also back for a possible reentry. You see that? So now at this point, we're either going for a short, waiting for a loss of the 0 line, and also a loss of our SME combo, right? Or what? Or we wait for a re-entry. At this point, we are at the center of the 0 line. We are at the 0 line. So this is not a call right now. Let me just clear this up. What I will do in this point, I will be looking for a re-entry. Why? Because now I have a bottom, next bottom, and now a confirmed bottom. I have a trend line. all right? I'm still above in here, right? If you're using your oscillator, your prime oscillator, that also means that you have access to your Market Oracle Pro. Let me turn it on. In this case, let me add one more setting in here, which is gonna be my dashboard. All right, let me see, dashboard, all right? I want to have volatility factor, prime score, and prophecy. Consolidation score, this is gonna be the one that I'm gonna be looking at, all right? And that will be okay. Let's just wait for it to load. There we go. I want to see, well, volatility factor, I really used to use it a lot. But at this point, I want to see, am I bullish or bearish? Should I be consolidating or not? What should I be expecting, right? So this is telling me that I'm still bullish. I'm still above dynamic reactor. And I'm still above, if you don't have the dashboard, I'm still above of what? Of my combo. Remember, in the bearish scenario, every retracement is an entry. Every retracement is an entry. In a bullish scenario, every retracement is an entry. Every retracement is an entry, all right? So we have the confirmation for the pump. Perfect, great entry right here at confirmation candle. No, wait, where was it? I think was this candle. Yeah, perfect entry at confirmation candle. Beautiful taking profits, losing the trend line. It's not about the breakout, it's about your retest, and then off you go for a short, right? So let's see what else now. We're gonna be waiting, by the way. Oh, bouncing, right? We need to confirm that we are below the zero line, but still holding my combo. That means I'm looking for something like this. You see that? All right, let's do it. So should I be long in here? Not quite there yet. That's why I added my dashed line, because I want my threshold area here. All right. Oh, there we go. This is a possible entry. Why is that? Previous support, right? Possible reversal. Reversal zone. What else do I have? Am I losing with a big body candle? Yes. So what could I be expecting? It's not about the breakout. It's about the what? It's about the retest, right? So you see how that long is playing out, but it's not telling you, hey, you're going to Valhalla. No, you're going to your next big resistance, right? And little flop, we didn't even have the chance to go all the way up, and then continuation downwards. All right, perfect. So did we have the pull up? Yes, we did. Did we know that we are going for the pull up? Yes, we did, right? So let's go and move with the other indicators at this point. We already have the theory behind the Gauss trend indicator. Remember, I'm not looking at the bullish or bearish signals. The only thing that these signals tells me are the pivot, the confirmed pivot. What is a pivot work for? For next support drawings, next resistance drawings, all right? Look at that this pivot acted as a resistance. Look at that this pivot acted as a support. Itty bitty, but still at a support, all right? So it's giving you more data, all right? So let's see what else we have in here. Let's move into the next one. Gauss trend crossing, it's out of the way, right? Let's take a look at the trend radius. Let's see. By the way, we explained it last class. We did not went in depth on this class, but we'll see. For example, at this point, what I'll be using it with or for is going to be classical support and resistances, right? Or some other predictive indicators. And also I want to use it with my SMA combo, right? Something that I don't like, but I just don't like about this about any other indicator. So it's just a classic. It just doesn't fit my style. It is breaking back and forth, back and forth, back and forth. So this is telling me ranging, all right? For me, it's a little bit noisy because I can easily identify it with just the breaking back and forth of the SMA combo, all right? But it's just part of using the indicator. So we can start adding, let me go here for the radius step and also for the start point distance. So these two, and let's focus on one big one first, and then we're gonna be moving into a more closer one. Let's just first change the radius. right? If we're looking for low radius, we're going to be looking for low or smaller trades, right? So let's go for something like 0.20. Just click away, right? Let's go for 0.30. Let's look at that. All right, let's click away. Let's go and even goes for 0.60. All right, so as you can see, we're having tighter radius, right? But also the start point, we haven't changed it. So that is also impacting on the radius steps. Let's go, instead of 2, let's go for 4. And what are we having? A distance between 1 point and your entry point. So this is usually to start adding that volatility factor, all right? So for example, if you have too many break back and forth, back and forth, back and forth, what you do here is you start increasing your step points, all right? Let's go something like 6. Now it's looking like something that I want to trade, right? Let's go with a larger area right here. I usually don't change it out of the base settings. And let's go for 1. Let's change this to somewhere around 5, and I think that will be something that I like, right? Yep. So what are we looking here? We're looking for inter-trade trades, all right? So inter-trade or inner structure. Basically, we know we're bearish from here because we lost what? Our SMA combo. So this is a helper to understand whether we should be longing or shorting within a trend. So basically, entry right here, entry right there, entry right here. But as you can see, for example, in these two trades, what's going on? You are not profitable. You will be breaking even. All right. So what you do with this? Well, this is when you start adding your third layer. Remember, you need points of confluence, right? At this point, remember I mentioned classical, support, and resistances. Let's go all the way down here. At this point, we're just building this up, all right? So what we need to range for this area to come downwards here. What are we looking for? Look at that. When we range and when we start making that end pattern, right? Or the reversal pattern, usually it's a range, it's a pause in time. Sorry, pause in price action while the time goes by. That gives us enough time for the calculation to go near it, or to close the gap. So at this point, what we need to see is that ranging zone, and then when we start getting closer to our dashed line, that will be our entry for a continuation. If not, we're gonna be looking for that support breakout, all right? Sometimes sweep of the lows, breakout, right? Breakout of the trend channel. You see how we're breaking out in here, right? You see that? Breakout, retest, and off we go. The exact same strategy of trend lines. It's not about the breakout, it's about your retest, all right? Let me read you guys, because I've been too into the indicators in here. Let's see what we got. We have username. What is up, username? Welcome. Great to have you, my friend. When clubs, I don't know, you said so, buddy. Are you gonna go to Las Vegas? Let me know. I'm not going to, but if you're gonna be there, maybe I just I call out some shots for you in my name right there. So Dutch, what's up? Welcome, my friend. That's a wine bottle. I'm not an alcoholic. I don't know, man. What are you talking about? But yeah, we have Wise Week. Welcome, Wick's wife, 1989. Welcome. Great to have you here. Laser Week. What's up, brother? Welcome. Salud. Welcome, family. So let's see who else we have in here. We have Harp. We also have Wick wife. We'll also shout you out. Dodge Cano. What's up, brother? Also shout you out. KDGT. Also shout you out. So there we go, guys. So Let's move into the next indicator here, and finally let's talk about layering, right? Because we need to wrap this up and move into the next chapter. So in this point, let's take a look at the ribbon NN. All right, let me just turn also this one off. Let's wait for load. There we go. All right, the ribbon, it is very close to our Gauss trend oscillator. The only thing that varies in here is, of course, not the calculation of at all, but you're seeing that disparity, that bump, and that's when we're having the different ribbons giving us reversals. All right. The ribbon NN pairs very nicely with the Gauss trend. Why is that? Because when you start seeing reversal, 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 you know you could be breaking that trend, right? Let me show you right here. Look at those reversals right there, breaking the trend line. All right. The ribbon NN also give you a zone of contraction. Usually I use those zones of contraction for bouncing for continuation or rejection. We'll see. Let's take a look at one of those examples. Let's take a look at here when we are gathering all of those threads together, right? This is what I want to see for support or resistance, all right? Just like a current, I like to see it like a current. For me, this looks like a, I don't know, a cloth turning, or how fluid dynamics works, right? When we start seeing that contraction of multiple ribbons, that is generating live a support or a resistance. All right, so how do I use them? Well, when I get close to it and I see those kind of like currents forming, I know I'm heading to a resistance or a support. The strongest currents are where they all are lined together like this. All right, another important thing will be when we start twisting like that. All right, it is a late confirmation. Yes, it is a late confirmation, but also you're going to be using support and resistances to enter and exit with this ribbon. All right, so basically you can take a look at here. For example, we're having a lot of air right now, right? What are we going to be looking for right now? We're going to be looking for this, maybe first one bouncing, and then looking at the next one, bounce, right? Bounce, and then maybe this one bounces farther, maybe this one bounces farther, right? What are we going to be generating with those, all of those bounces? A current like this, right? A current, let me show it to you. A current like that, right? When we have a lot of air, you see how we start bouncing in the background, right? Let me even go here and turn off the candles. You see how we're bouncing differently here? And then we start creating the current, right? The current. So that's what we're looking for on the ribbon NN. All right, other than that, let me turn back on my candles here. Let's move into the next one, which is the mats. Mats, it's a combination of kind of like moving averages. Kind of, all right? I'm not going to be going too nerdy into this because there's no need to. Remember, you already have the GPT professor that you can put in here its equation, and it will explain you exactly what it does. But just use it as a moving average. Usually the mats, I use it in conjunction with my SMA combo or my dynamic reactor. I use them when they're together, all right? When they're together, big support. When they're together, big resistance, all right? When they're together, again, big support or big resistance. If they are just flattening out like in here, well, once again, breaking back and forth, it's just a range, right? But look at that. When they're together out of a range or out of a trend, big resistance, all right? When they get together for support, again, big support. So just wanted to show you that one. It used to be one of my favorite tools. I don't use it anymore. Why? Because I've used right now the plus section, which at this point, I'm trying to just use as less indicators as I can, but also I want to show you that I don't limit the amount of indicators that I use, all right? Now, order blocks. Remember, order blocks are fantastic. So order blocks, very straightforward. Something that you need to know about order blocks are that they are dynamic, all right? What is that dynamic thing? Well, if I set an open order, all right, what happens to that order? That remains open until the price goes there, and then I exchange my money, right, for, in this case, Bitcoin, right? That is when an order block becomes a what? A support or a resistance, because money value has been exchanged. In the meantime, as my order is an order block. It's just a floating order waiting to be grabbed, all right? So what is this measuring? It is measuring a calculation on where those orders reside, right? Where those orders are waiting for you or waiting for the price action. Usually that gives liquidity. That is liquidity to be grabbed. So you can expect those order blocks to be magnetic, all right? First of all, magnetic order blocks. Then remember that those order blocks, as I mentioned, they are dynamic because nobody's stopping me to cancel my order and then opening up maybe in here. All right. Remember our layout entries? Well, then that's exactly the same thing. So as time goes by, do expect the order blocks to start migrating up and down depending on the price action. So you want to use the closest order blocks to you or the bigger order blocks that you can see right there. All right, so basically order blocks, another support and resistance, magnetic action, and then they move around it, right? So bar magnifier, this is a big one. This is kind of like the volume right down here, but sideways, right? This is important because you don't need premium or anything like that to get it. Another important thing is that you can change the look back period, 100 candles, right? So how do you look that? Basically, you want just to analyze an area. So I can do here and look at the candle count, right? 50 bars, 100 bars, 200 bars. Let's go for 200 bars. There we go, 200 bars, all right? Maybe you want to measure just the 200 bars volume. Maybe I can go here, look back period, 200, click away, click OK. And based on that new input, I have what Piper calls the nipples, all right? What Alex on Crypto calls the shelves, right? So why is this important? Because we're going to be using them as support and resistances. Then the largest one will have, in this case, because I Control C too many times, it's going to have a dashed line. Usually going into a higher time frame, it's going to be giving you, there we go, a farther or a bigger line in here. All right. Once again, look at that. If I change this to maybe, I don't know, 400, all right, the line position, well, in this case, it did not move, but going 200 bars or 400 bars away, look at that. It gave me a height all the way till here, all the way to here, right? So I do see an important area which we are breaking downwards in the 4 hour with a big batty candle. Guys, this is a breakout confirmation. It's not about the breakout. Where are we going? To previous support, right? We can use your support resistances. It's about the retest to where my VPVR is at, with my next resistance is at, right? Waiting for, look at that, what's happening here, losing the bullishness, right? And off we go. Be careful in the markets on the 4 hour because more pain it's coming right after a little bounce. All right, lower time frames, maybe we can start looking for that bounce upwards and then a rejection to the downside. All right, so let's just I think, let me see if we have any other oscillator, on any other indicators to watch. Yes, the bar magnifier. Let me just get rid of this one so we can see the last two that we have in here. Let's take a look at, let's get rid of mats. Perfect. Now let's take a look at the FIB. There we go. The FIB channels here. So let me just click OK. Turn this one off or even remove it. All right. Let's turn it on. And this is a set of Fibonacci's, all right? What's up with this Fibonacci's? Well, we're going to be looking at golden pockets with volume allocation, and I show you this the last class and we bounced perfectly from them, right? So it's adding the POC, point of control, with volume allocation from the low to the high. So it's automatically giving you the fib retracement placed. So it's telling you, hey, most likely, what's going to be our target? Downwards to this area. Remember that I told you in 4 hours we could be having a bounce up. Why? Because right now, as we speak, we are on this area of support. Is this a good area to start jumping in? Well, remember also what we talked about, our theory. Where is our zone? Where there's bunching up of candles, right? There we go. In this case, the little thing came up to be a little bit higher here. Yeah, there we go. But still, remember that we calculate that by looking where we have the bunch of candles, right? The bunching up of those candles. And guess what? It is very, very, very close, if not overlapping, as we're talking about, with not only the POC, but also with the next fib retracement zones, all right? So it's telling you the possibility of reaction, right? And also the targets. Be aware of it. So let's go and take a look at something differently on this one, because I think this is a very powerful tool. Look at that. Remember what we mentioned, a little bounce to the upside, right? Let me just clear this up. What's happening here? We're going to big fib levels here, right? So where's my drawing pane? Here it is. Where's the bigger volume? Here it is, a bigger volume. Possible target here. So we could be going to the target and then going to the POC, point of control. You see that? Let me just turn off the candles here. POC right there, right? So looking for support and then the reaction based on the Fibonacci retracements. You see that? This is out of fibs, guys. This is one of the most important tools that I could ever use. I still use it. In private, I try not to put it into that my list, right? That is just to avoid, you know, like too many indicators on my screen. So let's move into the next into this one. Let's just take a look at the configurations. Time frames, daily. That's cool. Why? Because daily usually give you the best results. Volume, all kind of volume levels up to 12. You can expand them if you have too much liquidity. For example, in this case, would make sense that we expanded just a little bit more to see what is right below here. I usually like to have 1 or 2 low volume blocks just to make sure that I'm not having an outstanding volume hidden right there, right? That might be calling for the price action to then wick down and do a V-shaped recovery. All right. The next one is the fib trend. Let's take a look at here. Fib trend, we use it at the kind of like the same way, but also let me turn off my support and resistances. We have the trend based on the Fibonacci. So we are bearish now. All right. What does that mean? That we could be looking for retracement to the areas of the Fibonacci. All right. This is just a different perspective of how to use the Fibonacci. Between the fib retracement and the fib channels, I would use both of them to give me a different perspective. So I'm bearish. Yes, cool. But where am I bearish to? To the volume zone. Does that pairs one to another? Oh, yes. Look at that. You see that? And where to? Where can I go to if I bounce from there? And you see how is it shaded? Let's turn this off and turn the other one on. Well, what is it coinciding to? To my dynamic reactor or my SMA combo. All right. The other one is giving me a POC based on the volume. So what can I do in here? If I go for a long, TP number 1, TP number 2, and trailing to Valhalla. Right? So it's not about ignoring or comparing. You don't want everything pointing exactly at the same points. You want to have that area of slack. Why? because you do have that slack or that jagged movement in a range, right? Sorry, in a trend. A trend is not a one candle movement. It's a series of candles making back and forth with a direction, all right? And that is important because if we understand the trend, we can jump back into the retracement until we break out, retest, and off we go. At this point, what I'm waiting for, it's gonna be the retest, maybe further low. And we're losing the support, so we're most likely gonna be going a little bit lower here. All right, so, oh yeah, she's right next to me right now. She's typing on her phone. I can see her. Hey MJ, what's up? You cannot hear her, but yeah. Hi, she said. Yeah, absolutely. By the way, she's gonna be joining me maybe in the future. She's gonna be keeping me update with the chat, so yeah, I can be more involved with you guys. So let's see. So we are basically out of time. Let's just take a look at it very quickly on the ledgering system. All right, at this point I already have my indicators configured the way I like it. I already know how to use them, right? So I'm gonna be just keeping this one in here. I'm moving it all the way to the upside. Here we go, right below my market oracle plus. Why? Because my SMA combo is gonna be what defines my trend. So the first thing I want to know whether I'm bullish or bearish. At this point, I am bearish, right? And it's not about the breakout, it's about the retest. I want to see that retest for a further continuation, and off we go, right? So just by looking at this single indicator, I already can start predicting what structure, right? It's not about breakout, it's about your retest, and off you go. In this case, double top, all right? So let's take a look at what next. In this case, I'm gonna be turning on support and resistances. Oh, where do I have support and resistances? Well, I have one here, maybe another one there. Can I turn something else? Yeah, those are 12-hour support and resistances all the way down here. Oop, a little bit alarming, isn't it? A little bit alarming. So let's just keep an eye on where they are. At this point, I don't really care much about them because they're too far away. So let's just turn it off. Let's go for the next one. Let's go for the trend channels here. There we go. Do I have a trend channel? Yes, I do have a calculation with moderate volume breaking back in. Now it's getting too noisy, but I already have marked support and support. All right, so look at how ledgering helps me turn off what is making noise. But I already used my pen tool, right, or whatever, my brush tool, to mark what? My interest zones, right? Let's keep an eye on that. There we go, look at that. This is a support being manually marked. And now I see that I have a range. Remember what we learned at the beginning of these classes. If we have a fake out and then we break back inside the range, most likely we're gonna hit the bottom of the range. Where is the range bottom? Between here and here. And guess what? Where am I having now my confluence? Right there. You see? Range and support. All right. Let's go for the next one. EMAs. Oh, I lost EMAs, so I don't have a use for them now. So let's turn them off. Gauss trend channel. Oh, I already lost it. All right. And I don't have any other calculation downwards, so I don't have a use for it just now. Let's go for the trend radius. I have breaking out. I do have the startup of this new one, so I could keep keeping an eye of it. But so far, let me just get rid of it. Let's go for order blocks. Oh yeah, look at that. I'm taking liquidity out of this order block. That means that I could be starting making a structure here. What kind of structure? Just a bearish structure because I'm in a bearish inner trend, right? There we go. Could this be maybe a range? I don't know. I need to wait. But so far, this support zone and this order block are telling me I will be getting encased with at least a bounce on that area, right? Now, let's turn on something else. The FIB levels. All right, maybe the FIB levels and the order blocks do not match each other. They Well, they're pretty clean, to be honest. Let's take a look at chunky candles here. Right, chunky candles, what's up? So we have some volume. Most of the volume is right down here where I have top of my range and support. All right, so let's mark another line in there just to compensate for this high volume in here. So there we go, Fib levels. Let's turn them off. Let's go for Fibonacci trend. The trend is bearish. Where am I looking for? Well, I do have another line in here for the base. All right, let's just turn it off. And then as I turn things off, I have a revealing pattern. First support, secondary support, right? And then, well, what am I missing? Flip of the ribbon. Do I have flip of the ribbon, or I should be waiting one more candle? Waiting one more candle, right? To get that rest of my indicators oversold confirmation, maybe reversal, seeing the ribbon flip. I'm already into the flipping zone, so I should be looking at the next support, either here or there. I'm gonna be aiming long position right there. My stop loss, I'm gonna be aiming maybe at half of it, or I should actually be aiming all the way down here, and then my taking profits to where? To my first resistance up here. Am I above 1? Yes. Do I have my wiggle room? No. What is my wiggle room? Does it take me here? Yes. Is it too chunky for me? It is. I don't like it. So what am I going to be doing? Cutting in half my entry. Half of an entry here. Where is my next support? Right there. Half of an entry there. My stop loss is still on place. You see that? If I can reach all the way down here, my average position is going to be all the way down there for a way better bounce. So let's wrap this class out with this prediction here, with this analysis. Already we have a ton of tools. Guys, you don't need to use them all, although I suggest you using a good bunch of tools. Remember always the basics, right? Bottoming patterns, double tops, double bottoms, right? SFP, right? Breakout trend lines. It's not about the breakout, it's about your retest. Breakout and change of the trend, right? Channels, so on and so forth. That's it. And then use your indicators to show you where, mathematically speaking, where things are in a point in your charts, right? So basically just confirming where the precise point of it is, and then you just adjust your entries based on that support and resistance. All right, other than that, guys, thank you so much for joining. Hopefully you are having a blast just like I am. You already should be having all of the advanced tools to be an advanced trader. You do need to start practicing, because the way that you read them comes with practice. All right, first, remember, we just saw a ton of theory. Usually theory takes like a week to, or at least in my case, took like a week to dissolve within my brain, right? And then took another week to actually be able to find it and define it in the trends as we are speaking, or as I'm doing my analysis. All right, you need to practice on this one. And also, guys, as you already have the tools, use them. They're gonna be of a great tool. But if they get too noisy, do not be afraid of eliminating them, or do not be afraid of turning them off. As you can see, I most of the time have them off. All right, most of the time I'm looking at bear candles with my SMA combo, and maybe something else like support and resistance, right? Or something like that. I go very minimal, and I try to stick with the bare basic. Hey, Jay Violet, welcome. I did not see you around there. Welcome. Thank you for joining. So guys, thank you so much for joining. And as always, see you guys tomorrow.